If you listen or watch to Bank of Canada or Chrystia Freeland about the state of the Canadian economy, you get a picture where everything is so bright and gloomy and the economy is so resilient and we don't have to worry about anything about recession. But yet, at the same time, OSFI, which is the regulatory body in Canada for the banking system, they are coming out loud and clear and asking all the big six banks to increase their minimum capital ratio requirement. If you don't know what is minimum capital ratio requirement, it's basically a very critical indicator to understand a bank's financial health. And the way it is calculated is based upon how much capital you have in the equity, in the reserves, compared to how much assets you have on the balance sheet, and those assets needs to be risk adjusted, risk weighted. For example, the government securities, they may have 0% risk, but the mortgage loans, the car loans, the credit card loans, that will have higher probability of risk. So when you risk weight those assets and then you calculate the ratio between the capital and the reserve compared to how much assets they have on the balance sheet, that will give you a figure which we call a tier 1 capital ratio. Typically, if it's above 10%, it is considered healthy in a normal circumstances. But when OSFI is coming out loud and clear asking all big six banks to increase the minimum capital ratio requirement to 11.5 by this November, that means they are looking at something which we are not seeing or which Bank of Canada and Chrystia Freeland is not talking about, which means they must be looking at the probability of people, i.e. consumers, homeowners, credit card, loan that people have taken, car owners, and the businesses, if those peoples, they have higher probability of getting default in the next 2, 3, or 4 months, then this capital ratio requirement of 10% would look insufficient. So when they say you must increase it by 11.5% by this November, that means they're seeing a high probability of people getting default on those loans, which is why they're asking banks to increase it so that they can absorb any potential loss coming into the banking system from these defaults. So that tells you there's something definitely cooking in the economy which is going to trigger a recession, and these bankers, central bankers, Triff Macklem and Chrystia Freeland, they're still painting a picture where everything is good, don't need to worry about, unemployment is so low, consumer spending, economy is resilient, economy is overheated, and we still have to jack up the interest rate to cool it down. That's not how things will look. So you know that the mainstream media is not painting this picture to you because they are kind of hiding all these details, but I'm telling you this is exactly what OSFI is looking at. Otherwise they would not come out loud and clear and ask banks to increase the minimum capital ratio requirements. Anyway, what do we do about that? As an average consumer in the economy, what I should do, I will make sure that I have enough cash available for my rainy day as an emergency fund. I'll make sure I pay my debt, credit card loans, pay it. No matter what you do, the credit card loan is a drag on you. 25% interest rate, it doesn't make sense. And if you have equities in the stock market that is generating 3%, 4% annualized return, it's much better than selling that and paying a 25% interest debt on you. Okay, so make sure you pay off as much as debt you can, have emergency fund available to you for any days, and reduce your discretionary spending. Right, that's what we can do at a minimum to be ready for any potential recession which is coming at 100 miles an hour towards us. Let me know what you think. If you like it, give me a subscribe. Even if you don't like it, give me comments. Let me know why you don't like it, and I'll see you in my next video. Take care.